Today, I will explain what a 401k plan is, what is the difference between traditional and Roth plans, how to choose between the two, and how it all works. Plus, I will talk about how a small business can offer the 401k plan to their employees. My name is Richard, and for many years, I have been helping thousands of companies across America to find the right solution for their business needs. Feel free to ask me any questions in the comments below. So, what is a 401k plan? A 401k plan is a savings plan offered by an employer to their employees for the purpose of accumulating money for retirement. These accounts have tax advantages for the employee enrolled in them. The employees who voluntarily sign up for a 401k plan agree to have a percentage they choose deducted from their paycheck to be deposited into an investment account in their name. These deposits are allocated into a wider range of investment options, usually mutual funds. So, what are the contribution limits for a 401k plan? There is a maximum contribution limit an employee can contribute annually. Employees are able to funnel $22,500 towards their 401k account for 2023, which is a $2,000 increase over the prior year. This contribution limit is significantly higher than individual retirement accounts or IRAs. IRAs for 2023 limits are only $6,500, which were increased by $500 over the prior year. There are also catch-up contributions for employees over 50 years of age, which is much higher at $73,500 for the year 2023. Now, what are the tax advantages of 401ks? In order to see what they are, we need to differentiate between two types of 401ks, traditional 401ks and Roth 401ks. Their main difference is how they are taxed. So let's talk about traditional 401ks. Traditional 401k contributions are pre-tax. What this means is that any contributions made to a traditional 401k is deducted from annual income and no income tax is paid on these contributions. This means that the taxable income of the employee is reduced by the amount contributed. The taxes are collected at a future date once withdrawals take place, typically at the age of 59 and a half or later. What are the tax advantages of Roth 401ks? Roth 401k contributions are post-tax. This means that taxes are paid in the form of income on all contributions. It does not reduce an employee's taxable income at all. The tax advantage of a Roth 401k is that no taxes will be withheld at a later date once withdrawals are made. So if the investments that were chosen were to really outperform, all of that gain can be withdrawn completely tax-free. How to choose between a traditional and a Roth 401k? If you expect to be in a lower tax bracket after retirement, you may want to opt in for a traditional 401k and take advantage of the immediate tax break. On the other hand, employees who expect to be in a higher tax bracket after retiring might opt in for a Roth so that they can avoid taxes on their savings later. You can also opt in to both traditional and Roth 401ks, as long as the combined contribution does not exceed the annual limit. What is employer matching? Besides tax advantages with the IRS, many employees also enjoy employer contributions as well. These are called employer matching. There are various formulas to calculate that amount. Some employers will match 50 cents per every dollar the employee contributes up to a certain percentage of their salary. Employer contributions are allowed to both traditional and Roth 401ks. 401ks earn money based on the gains of their assortment of investments between stocks and mutual funds. The earlier one starts contributing, the more that money will grow based on the power of year-over-year compounding. This means that returns generated are reinvested to provide even more returns of their own. How do withdrawals work? Withdrawals can be very tricky, especially when the money is accessed before the account holder reaches a certain age or meets a specific criteria. If the money is withdrawn without meeting the age requirements and specific criteria, the IRS will charge a penalty. This penalty is usually an additional 10% early distribution tax on top of any tax you owe. It is not advisable to take withdrawals unless you meet the criteria. Having said that, most employers allow employees to take a loan from their 401ks. In essence, employees take money out of their 401k accounts and they pay themselves back over time. It is important to consider if the employee leaves their job before repaying the loan back, they must pay the full amount they still owe in a lump sum or face a 10% penalty on the loan balance. Now, what if you don't need the money and want to let it just sit there compounding, looking to grow your nest egg as much as possible? You can do that, but within limits. After age 72, retired employees must withdraw at least a specific percentage from their 401k based on their life expectancy at the time. What happens to your 401k once you leave your job? Once your employment terminates, whether voluntarily or otherwise, you have up to 4 different options depending on your situation. Option 1, withdraw the money. This is typically the least beneficial option since the money withdrawn will be taxable and a penalty will be applied if under 59.5 years of age at the time of withdrawal. Option 2, roll over your 401k into an individual retirement account or IRA. This is a wiser choice since moving the account into an IRA with a brokerage firm will maintain the account's tax advantaged status. Keep in mind that you must roll over your 401k into an IRA within 60 days of the end of your employment to avoid taxes and penalties. Option 3, leave your 401k with your old employer. This option only depends on your old employer. Some will allow it and some will not. This option makes sense if you're satisfied with the investment options the plan offers and if it is well managed. Option 4, move your 401k to a new employer. This option works if you leave your job for another within the 60-day period. This option, like rolling over the account into an IRA, will also maintain a tax-deferred status and avoid any penalties. How can a small business set up a 401k plan? Now that we have a good understanding of what a 401k is and how it works, how can a small business set one up? There are 2 options. Option 1, set it up on your own. Setting up a 401k for a small business on your own will require some good deal of research. It is important to do your due diligence in researching firms that provide record keeping and third-party administration services. You will need to look into reputable mutual fund companies, brokerage firms, and insurance companies. You will have a fiduciary duty to ensure that the plan is providing a benefit to the participating employees. Once you have selected a retirement service provider, you will have to create a 401k plan document that complies with IRS code and outlines the details of your plan. Then, you will need to set up a trust to hold the plan assets. You will need to also maintain records of the 401k employee contributions and values and provide all of the necessary information to the plan participants, like a summary plan description, and update the participants on investment changes, and also communicate to them all fees associated with the account. Option 2, set up the 401k under a professional employer organization. Setting up a 401k via a PEO is a lot simpler. Since the PEO will handle all of this for you, they will make sure that you're complying with all regulations and do the plan testing for you. Also, the fees you and the employees pay for the 401k are usually lower. Professional employer organizations provide this benefit as an added service to small businesses. Typically, any fees associated with setting up a 401k are only pass-through fees. They don't add any additional fees on top while you take advantage of the economies of scale under the PEO. My company can help you find the right professional employer organization for your business anywhere in the US. This service is free to you. Simply visit our website and fill out the contact form to get started. If you have any questions, please let me know in the comments below. Click like if you found this video helpful, and don't forget to subscribe to my channel and turn the notifications on. Thank you and have a great day.